Okay, right. So guys, very good morning to all of you. Let's start then today's session. Okay. Right now, guys, last Sunday, there is a half question that we have to complete. So what I will do is, guys, that one, I'll keep it towards the end of the class. I will start off with a fresh question. Okay, right. Good morning, Daniel. Right. Guys, those who have the exam kit with you, right, we'll start off ratios, right, like always. Can you guys please go to this question, guys, over here, a question in the name of treat. Okay. Again, one of the recent past papers, I believe 2023 past paper is what we are going to do today. Okay. Right. Please go to this question, guys, over here. In your exam kit, question name is treat. Okay. Right. So, guys, those who have your laptops, guys, can you open the MS Word? Right. We will analyze the question through them. Okay. Right. So, guys, this is the question that I'm going to do. 444. Question name is Treats Corporation. Right. So, please mark that one, guys, over there. Put the heading. Question number 444. Question name is treats. Yes, you all can see the board from there. Is it okay? Okay. Guys, now look at the first question of this paper. Okay, they are asking required A part 5 marks. Calculate for treat equivalent ratios. Now, guys, last Sunday, what did they tell? Adjust and calculate. Right? Adjust and calculate means there are some things that you have to consider. This one is not like that. Directly calculate ratios, which makes our work much easier. Okay, if it's just calculate ratio, guys, you can just copy the numbers and finish it off. All good. If it's adjust, then that's where you need to be slightly careful with the numbers. Okay, but anyway, calculate treat corporation equivalent ratios. Guys, equivalent ratios means this one. Whatever they have done, you also now have to do for treat. Okay, shall we start then? Right, put the heading, guys, over there. Right, let me open MS Word. Okay. Can you guys start writing the equations, guys, for these ratios faster? Okay. Please start writing the equations for these. Okay. Right. So let's start. 444. Just give me a minute. So you all can start writing the ratios, guys, what they have asked here. For some reason, the keyboard is not working. Just give me a minute. Okay. Yeah, Basil, I'll share a photo of it to the group. Just give me a minute. Okay. So guys, then let's start, right? 444 question name is rates, right? First question, guys, they want ROCE. So guys, ROCE, can you guys write down the equation? What will be the equation, guys, over there? Right? Operating profit, right? Operating profit divided by capital employed into 100. Okay. So guys, what is capital employed? Equity plus non-current liabilities. Right. Then guys, next one, they want net asset turnover. Right. What's the equation, guys, for net asset turnover? It's going to be, right, revenue divided by capital employed. Okay. That's it. Right. Next one, guys, what do they want? Gross profit margin. Right. Okay. So guys, gross profit margin, guys, normally what's the equation? Gross profit divided by revenue into 100. Okay. Right. What's the next one, guys, that we have? Operating profit margin. So guys, operating profit margin, guys, is equal to, right, operating profit divided by revenue into 100. Okay. What's the next one that we have? Current ratio, right? So what's the equation, guys, for current ratio? Current assets divided by current liabilities. Okay, what's the next one that we have? Inventory turnover period. So guys, for normally inventory turnover period, guys, what's the equation? Cost of sales, no, my bad, has to be average inventory divided by cost of sales into 365. Done. Then guys, next one, they want gearing. The equation there itself telling, guys, can you see here? Debt divided by equity. That's it. Okay, so they're giving it in times, percentage. That means, guys, into 100, huh? Right? Debt into equity into 100. All right. Okay. Then, guys, next part, they have over here receivable collection period. So receivable collection period, guys, normally what's the equation that we have? We have, right, receivable collection, right? The equation is going to be credit sales over what, guys? No, receivable collection wrong. Average receivables divided by credit sales into 365. These are the equations. Right. So guys, while you all write down the equation, for those who don't have this particular question, guys, I'll now share it with the WhatsApp group. Right. So remember, guys, this particular question is spanning to roughly around 3 or 4 pages. Okay. So yeah, I'll share the photos this way. Guys, now those who have done copying the equations, okay. Guys, first of all, I'm giving you the profit and loss account. From this, whatever that you want to copy to the equations, can you guys copy it faster? Guys, remember the question is one full page. If I go one full page, the thing is you can't see the numbers clearly, right? So therefore, guys, what I would like you all to do, go through the profit and loss account, whatever that you want to copy to the equation, I want you all to quickly copy it down, right? Do that part, guys. First, I'll give you 5 minutes. Yes, correct, Shamla. Guys, I missed out on a small thing. Trade receivable collection period is there. No, guys, this one can you put into 365? Because I forgot to do that earlier. Okay, please put that one, guys, over there into 365. Right. So I zoomed out a little bit. Anyone who wants to take numbers from the SOFP asset section, you can guys copy that also, right? SOFP asset section, if you want, you can take down those numbers as well. Okay. Okay, but guys, let me also copy the numbers, whatever that I want to. Okay, first one, guys, I can see here, I want what you can say, guys, operating profit. Okay, so for operating profit, guys, I need to take 99,078 divided by capital employed. I don't know how much is that, so I'll keep it until the next part. Right, next line, guys, I need my revenue. Okay, so I can copy that one, guys, over here. My revenue is going to be 214,553. So always remember, guys, when they just tell you to calculate, you just copy all the numbers what they give. No need to think twice. No need to adjust anything. You understand? Right, next one, guys, we have gross profit. Okay, so guys, the gross profit over here is 106,554 divided by revenue. What's the revenue? 214. 553. Okay, into 100. 1 minute. Yeah, guys. Operating profit is 7,000. No, correct. I have taken the operating expenses. 7466. Right. Then, guys, here also it has to be then 7466 divided by revenue. What's the revenue? 214,533 into 100. Okay. Right. Current asset, current liability, guys. Still, I don't have inventory turnover, average inventory. Guys, can you remember I said you in FR, normally we don't calculate averages. Okay. So instead of average, you have to always take what inventory, closing inventory, because they won't give the opening inventory in exams. So always take the closing as your average, right? So let me guys copy this one here. Right. My average inventory is going to be 30,393. Right. Now, guys, if you are not understanding how I'm taking the value, you should tell me, because ratio, first you have to calculate, then only you can evaluate. Okay. So you need to know where the numbers come from. Okay. Cost of sales, 108,009. Okay. Right. Into 365. Done. Okay. Now, guys, over here, trade receivable. Now, the equation says average. But once again, guys, remember, average trade receivable is basically what, guys? Trade receivable, the closing trade receivable. So you take this one here. Can you see, guys? Current assets, trade receivable is there. This one, 17,603. Okay, right. Now, guys, we are all good, right? Okay, now, guys, let me go down. Right, this part. Right, now let's take the remaining numbers. Capital employed. Guys, always remember what is capital employed? Equity plus non-current liability. Okay, so over here, guys, now can you see here? The equity is 25,968 and that into 100. Sorry, 25,968 is equity, no, plus debt, non-current liabilities. 33,621. Once again, guys, for those who don't understand that part, please remember. Capital employed is, guys, equity plus debt, non-current liabilities. These are what we call capital employed. So once again, guys, over here, 25,968, okay, plus 33,621. That's it. Right. Then, guys, over here, current assets and current liabilities. Now, the current assets are here, guys. Can you see here? This one, 47,996. Which one? Yeah. Yeah. So Rimaz had asked me, how can we take borrowing? Borrowing is loans, no? Okay. Loans are normally the interest related liability, no? That's why I have taken it over there. Yeah, net asset means capital employed. Now, usually in advanced level, it was like this. No, net asset turnover means we used to take sales over total asset. That is asset turnover. Net asset turnover in the sense it should always be capital employed as the denominator. All good, Akhil, with that one, right? Net asset turnover means we have to take this one, capital employed. Right, guys, next part then, current assets. So current assets are, guys, 47,996 divided by current liability. Current liability, guys, what's the answer? Here, guys, can you see this one? This is the current liability, okay? 50,391. Okay. Over here, guys, debt. Guys, what is debt? Non-current liabilities, which is what? 30 something, no? 33,621 divided by equity. So, guys, equity was 25,968. Okay. And that into 100. Okay, guys, next one, credit sales. Always remember, guys, in papers, if credit sale is not mentioned, this sale is here, no, guys, this entire sale, you can assume that as, but credit sale. Okay, in papers, if they don't tell how much is credit sale, that entire sale you can take it as credit. So let's mark it, guys, over here. 214,553 into 365. Right, these are the answers, guys, for your ratios. Any number that you are not understanding how it came, please ask now. I will explain, right? Then we can move on to the evaluation after that. Okay, right. Check and let me know, guys, quickly. If not, guys, what you all can do, guys, you all can start calculating your ratios. Okay, use your calculator and guys, take it to the whole number, then it will be more easier, right? When you do your calculations, please take it to the whole number. Right, 1 minute, Daniel. Let me check with the others. Yeah, credit sale, Nazmi, I took the entire sale. Now, normally in FR paper, they won't tell us how much is credit sale. So therefore, what you can do, the revenue is there. No? You can assume that's credit sale and take the entire thing. Yes, Akhil, net assets are capital employed. Okay, net assets are capital employed. Because that means bro, only long-term liabilities, only non-current. Yeah, you can get the answer because normally the paper doesn't specify to what you have to round it off. So you can always now, if you look at the sector, right? Now, can you see most of the numbers they have taken to the whole number? So you can take it to the whole number that way. Right. Yeah. Daniel, usual net assets is equal to assets minus liabilities. But when it comes to the ratio, though it says net assets, we take capital employed. Okay. We take capital employed. Now, normally in consolidation, net assets is equity, no? Okay. But here we take capital employed. Okay, guys, then let me also now mark the answers. Little bit check and see, guys, whether things are okay with you. 7466, right? Divided by 25,968 plus 33,621 into 100. Guys, is it 12.5% approximately or 13? Okay, so we'll take it as this one, guys, over here. Either you can take it as, right, 13%, right, the answer, or 12.5% approximately. Both are accepted as correct answers. Okay, right. Okay, then guys, this one over here, 214,553 plus open bracket 25,968 plus plus 33,621. Okay. $214,000 divided by. Guys, can someone tell me, guys, what's the answer for net asset? Okay, I have got an answer from a student. Is it, guys, 4 times by any chance? Yeah, no, 4 times. Okay. Guys, I'm copying the answer what a student has given me, right? 4 times. Or something close even, no problem. Okay, like 3.6, no issue. You can either go for the one or whole number. I'm going to go for the whole number, guys, and it will be more easier. Right. Okay. So, guys, here it's showing 49.69% slash 50. Okay, 50%. Okay, right. Right. Then, guys, over here it shows 3.48. Okay. Or, guys, is it 3% approximately? 3. No, it's coming as 3. Coming as 4 then. 3 point, or is it 3.4? 3.4 or 3.5 we can take it, no? Right. 3.48% or yeah. Okay, so 3.48, yeah, 3-4 shape. Okay, let's see what they here they give. Here they have gone with 12, no? So you can either go with 3 or 3.48. Okay, guys, one of the two, no problem. Current ratio, guys, how much? Is it 0.95 times? Okay. This one, guys, is it 102 days? Yeah, no, 102 or 103 days approximately. Okay. Then, guys, over here, 129%. No? Yeah, 129%. Okay. Over here, guys, what's the answer? Now, here there is something wrong with the equation. Like, how much is the receivable collection period, guys? 30 days? Is it 30 days? Yeah, it's 30 days. Okay. Done. Right. So, guys, these are the answers what I have got for my ratios. Right. 1 minute, guys. Yeah. Online students, very good. Okay. Answers are good. Right. Okay. Now, guys, I want you to do a small work for me. Okay. Right. Now, even though you have the study text with you or exam kit, right? On the side, guys, over here, can you guys just note down the sector ratios also if possible? Okay. Right. Now, you have calculated the ratios for whom? Treat. Now, when we compare, we should be able to compare properly, you know, so rather than, you know, turning the pages here and there, right? I'm going to, guys, here mark the answer and keep for this person. Which person? Right? The sector. Okay. So, guys, the sector answers, I have copied it here. Okay. Right. If possible, guys, can you do a small work for me? Next to each of your ratio, can you just put a slash and write sector and write it down? Okay. Now, here, now we have 12.5. No, so what you do, you put a dash. Okay. And then you write sector. Okay. Slash sector. And you write the sector average next to it and keep, because if you can write it that way, it will be more easier to compare and tell whether it's better or worse. That's the reason. Okay, right. Can you guys quickly write down this one? No, Sanjeev, the thing is, it's not wrong. Okay, it's not wrong. But the thing is, this sector one they have given as a percentage. Now, can you see here? That's the reason why I'm going for the other one also percentage. You can say it's not wrong, but because sector is given as a percentage, R1 also I'm taking it as a percentage. All good? Guys, can you then copy down these and keep it faster next to your answers? The sector answer also. Okay. Like not like entirely involved. Okay. Usually you have what you can say at the next level, you have a subject called SBL, which is more business related, right? But at this level, most of it are numbers or finance related, right? Maybe audit, you can consider it to be a little bit of business, but in SBL only we have. No, at this level, we don't have econ anywhere. But mostly it's not there. Okay, right. Yes, because that would be the entry qualification, right? To start, you need an entry qualification. No? A professional qualification would be the entry. Okay. Right. Okay. Now, guys, look at this part. Treat manufacturer. Right. Thing is, when it comes to FR, we can't streamline that way what is needed and what is not needed, to be very honest. Okay. Because we can never know. Now, one thing what I can confirm for the exam is ratio question will definitely come. Apart from that, to be very honest, we cannot streamline like which is important and which is not important because they test it equally. So therefore, 100% sure ratio, but the rest we have to know in and out everything because we cannot streamline. There are some small standards like, agriculture, uh, things like, let's say, events after reporting date, those we can pay minor attention to. But apart from that, the rest we have to give equal importance because one or two questions can come anywhere. Now, especially if it's a company account question, you don't know which standard it will come from. Inventory can come, right? Foreign currency can come. So we cannot tell that way. Only thing what I can confirm is ratio is important. That's it. The rest we have to go through, unfortunately. Okay. Right. So guys, Streets Corporation is a manufacturing confectionery. So we are into sweets. Okay. Right. Right. Now, guys, moving on to the next part. Now, all these are numbers, no? Right. Okay. Now, guys, can you spend 5 minutes and quickly go through these points over here? First to now start evaluating. Right. 4 points have been given. Can you guys quickly run through this one? So the directors are now planning to update and replace much of the plant and equipment. Okay, now guys, see, we bought this for 637 million. Now it is how much over there when you buy for 637 million? Now, how much is this property, guys? This property is now 61 million. Okay, so you bought it for 631 million. Now it is 61 million, means, guys, almost 90% of the value has fallen. Now, even if you take 10%, it's 63 million now, right? So 90% of the value has fallen. So that means, guys, now these people are having some old equipments. Now, guys, before you move to the next point, can you guys tell me, when you have old equipments, what are the ratios that normally get affected by this when you hold old, right, very old equipments, right? Which are the ratios that can get affected? Now, see, you have calculated all these ratios, no, guys? Can tell me, guys, which one? Very good, Basil. That's correct, right? Yeah, current ratio also we can consider. That's true, right? What are the other ratios, guys, that get affected if you have old ones? Yeah, very good, Nazmi. That's correct. When you have old ratios, there are 4 things that is getting affected here, right? Can you guys tell me which are the 4? Right? When you guys have old ratios or old assets. Normally, guys, first of all, when you have an old asset, what is the very first ratio that gets affected? Oh, that's the one that people can manipulate easily. Which ratio? ROCE, exactly. So, guys, remember, when you have old assets, what will happen? ROCE can get manipulated. Because when you have old assets, the denominator is less. When the denominator is less, because, guys, see, now when it comes to ROCE, guys, look at the equation, will you? Right. When you have old assets, what will happen? Capital employed will be less. Capital employed less means ratio is more. So people can manipulate that way. Because of that, this also, guys, can get manipulated. Net asset turnover, because net asset turnover also, guys, we are using capital employed now. Right. So those 2 ratios are going to get affected. And then a student said me current ratio. That also true, because, guys, see here, these people are planning to replace and update. Now, if you're replacing the asset, you need to have money, right? You have to buy new. But, guys, can you see in this question? Look at current assets. Do they have money in their hand? No, they have bank overdraft. So little bit of a tricky situation that the business is in. And also, guys, remember, when you have old assets, what's going to happen? Depreciation can be there, right? Machine repairs can be there, impairment can be there. These things will affect your operating profit ratio, right? When you have old assets, high depreciation, high maintenance, high repair, high impairment, it can affect your operating profit as well. And then one student said me inventory turnover. That also you can connect, you can tell, because the machines are low, quality of the product is also low. Something like that you can tell. Okay, so that's good. Right, guys, let's go for the second point. Directors have paid a dividend of 7.14 million during the year, despite an existing and overdraft. So that one, guys, we can talk about current ratio. Okay, we have paid a big amount of dividend. Okay, next part, guys, let's go. The overdraft is used for working capital management. So that means, guys, these people don't have cash, right? Whatever it is, they're using their overdraft only. Next one. Treat Corporation sells its product through a supermarket chain. In addition to its own retail stores, most companies in the sector exclusively sell through their own retail stores. So we are selling to supermarkets mostly. Our competitors are directly selling through their own shop. Okay, that's the last point over there. Right now, guys, you all have read the entire question now. Okay, now, guys, now let's start evaluating it then quickly. Okay, right. First of all, guys, can you quickly give me a general comment about the performance and the position, guys, faster, right? Can you please, first of all, give me a general comment? Okay, start doing that part, guys, over there, right? Can you guys compare all of the ratios and tell how are we doing when compared to sector, right? Can you guys write a small overview first? General comment. Right. Guys, our ROC is higher or lower when compared to sector? Lower, no? Our ROC is lower. Okay. How about our net asset turnover, guys? Net asset turnover is also low. Gross profit? Almost same, no? Gross profit is, guys, almost same. 50 and 55, no? Operating profit? Low. Right. Yes, correct. Current ratio? We are low. Inventory turnover? We are way behind, Because guys, we are taking 103 days. These people are only taking 25 days. Debt to equity, again, way low, right? We are having more than 100%, right? Yeah, sorry guys. Net asset turnover, we are high. Correct. Net asset turnover, we are high. And then guys, on the other hand, trade receivable collection period 15 days, we are 30 days, so we are way behind. Yes, very good, Amjad. That point is good. It's a good point. Okay, so guys, first let's write a general point. Okay, so let's start guys over here. Right, when compared to the sector, okay, when compared to the sector, right, Treat Corporation is well below in both performance, as well as position. Okay, right. Then guys, put the subheading, right? Performance ratios. Right. We'll start with guys gross profit ratio. Okay. Exactly. We are performing well below the sector. Good. Right. So guys, let's start off with performance ratios. Okay. Right. Now guys, gross profit. How much is us guys? Gross profit. How much are we? We are how much? 13. Sector is 28. Okay, we are 13 and the sector is 28. Okay, guys, can you quickly tell me why is the sector having a bigger gross profit margin than us? Now, guys, see, when it comes to gross profit, see, Treat Corporation is 13%, right? This, don't mark this. I'm just writing for my reference. Sector is 28%. Can you guys tell me one main point? Look at these points, what they have given, right? What is the main reason, guys, why we are having a lower margin when compared to these people, guys? Okay, Daniel, the thing is we cannot exactly say that without having the data. Okay. Yeah, that point you can tell. The first point you can't tell. Okay, because we don't have the sector's data. No, that's the reason. No, wait, guys. I think my gross profit is wrong. No. Yeah. Yes, correct. Guys, gross profit, we are how much actually? 50%, while other people are 55. Okay, yeah, correct, yes. Right, online students, guys, you all have sent me good reasons. Okay, that is fine. Okay, 1 minute, yeah. Yes. How about the physical class students, guys? Why do you think there's a small gap between our answer and their answer? What's the reason? Regarding gross profit, guys? Sales, yes. Connecting point? Which one, guys? Out of these, right? The answer is over here in this area, in these 4 points. Why we are having a less margin when compared to competitors? What's the reason, guys? Yeah, we can tell that also. Yeah, we can tell that. Yes. No, I'm just more operating cost is operating profit, not gross profit. Yeah. Yeah. So, guys, one student said me over here a point that even I mean, I didn't look at that angle. Old plants. So, old plants means there can be some depreciation which can be marked to cost of sale. So, our cost of sale is high. Yeah, you can tell that. Yes. Yeah. There's another one main point, guys, in these 4 points. Yeah, online students, goods. Those are the answers. Nazmi, Basil, Asia, and Daniel, all of you have said those answers, right? Which point, guys? Exactly. Very good, right? We are, guys, selling through supermarkets, no? When we sell through supermarket, guys, our margin is less because supermarkets have bargaining power, no? They will tell this price we can't sell, you low weight. So our margin is less. Competitor, guys, what he is doing, he is selling through his own shop, no? So he can keep very high margin, but we can't keep a high margin. But on the other hand, though we are selling through supermarkets, still we are able to make 50%, which is a good thing. Because when we sell to supermarkets, we can sell in large quantities, no? But still we can make up for it. Okay, so that's the reason what we have to give. Okay, so let's start writing the answer, guys, over there. Right. The gross profit is slightly lower than the sector due to the following reasons. Okay. Right. A, since we are using old PPE, this can result in extra production cost. So guys, when I say extra production cost, guys, what do I normally say is that, like repairs, maintenance, wastages, right? Impairments, these things can affect our cost of sale, right? But the main reason, right? We sell to supermarkets. As supermarkets may have high bargaining power, this will reduce our margin through sales. Whereas our sector sells directly through, guys, once you find your point, you just explain in simple words. No need to use, a technical language. Explain in a simple words as possible. Now see, guys, I'm just writing, but I explain only, right? Not using any technical words, right? Our sector sells directly through retailers, which means they are able to keep high margin of sales. Right. Then, guys, we can also add, but still Trade Corporation has a 50% margin as it's able to compensate reduction in margins through volume of sales. What do I mean by that, guys? Even if we reduce the margin, because we are selling more products to supermarkets, we are able to compensate that, right? So for one product, maybe our margin is less, but supermarkets are, guys, people who buy in bulk, no, they buy a high order, right? So therefore, that small loss per product, we can compensate it through volume. When you sell more, we are able to. So we are actually okay, not really bad as well, right? Okay. Right. So guys, this is the maximum that we can speak about, guys, when it comes to what you can say, the ratio question. So always, guys, ratios, try to stick to the question, take evidence from the question itself. Okay, don't go away from them. Right. Now, guys, put the next part for me over there. Right. Now let's talk about operating profit, guys, quickly. Right. Operating profit. Yeah, Amjad, it's like this. There is no fixed thing. Now, there are some, now to be very honest, this question we can write a lot. There is no fixed. Whatever that you can pick up from the question, you pick up. Now, let's say now there are some ratios where we can only give 1 point. Give that point, right? If there is more than 3, you can write more than 3. There is no set way that way. All good. Right, okay. Next one, guys. Operating profit. Guys, our one, how much, guys? Trade Corporation. When it comes to operating profit, I think we got some 3 something, no? 3.4%. And I believe, guys, the sector to be some 12%. No, if I'm not wrong. Yeah. Sector is 12%. Okay. Right. Guys, can you tell me, first of all, what is the main reason that we are lower than the sector? Forget the data, forget the evidence. Tell me what's the main reason why we are lower than the sector? No. Usually cash will affect our this one, right? Like current assets. Okay. Exactly. Guys, first of all, go with the most easiest one. Guys, if the gross profit is lower, then operating profit also will be lower. That's the first main reason. Understood. After that, you can move into details, right? So you can write down over there, right? right? A point A, or you can write, right? Operating profit is lower than, right, the sector. Yeah, very good point, Amjad, right? Is lower than the sector due to lower gross profit margins mentioned above, right? Mentioned above. Okay, so always, guys, when you start operating profit, first of all, you have to speak about what? Gross profit. You should tell, because that is lower. This is also going to be lower. No. Basil, once again, what happens is, for that point, now it's interest. Now, interest will affect finance cost. Finance cost doesn't affect operating expenses. What is operating expenses? Usually administration and distribution expenses. Okay. When you take loans, that will affect the interest coverage, not the operating profit. Right. Okay, guys. Can you guys now tell me? Okay, now one reason is our this one is lower. Our gross profit is lower, then that contributes to operating profit being lower, right? What are the other points, guys, that you can tell? Maybe from this information what they have given, why is our operating profit much lower than these people? Yeah, you can still mention, because we don't know what is the policy of the organization, so you can tell. Yeah. So Basil, let's go with the first one, because the second 2 points will affect the gross profit. You understand? And we have already spoken about that. So let's go with the first point. Okay. How about you all, guys? What's the main reason why our operating profit is lower? This part, no? 1 minute. Yeah. Rifki, we are not maintaining supermarket. Okay. Supermarket is conducted by someone else. What we are doing, we are just selling it to supermarket only. We are not doing supermarket. Okay. We are just selling it to them only. Very good. Yeah. One thing, guys, what we can tell is selling and distribution cost is higher. So maybe our gross profit is lower. That's okay, guys. Anything else that you can tell from these points, what they have given here? Anything that you can add to your this one? The old assets are there, no, guys. So when old assets are there, what will happen? High depreciation, high repairs, high maintenance, impairment losses might come. Right. So I think that's pretty much it, guys, what we can speak. Anyway, we conduct second point and third point. Second point and third point is related to current ratio. Okay, so then guys, let's start writing those answers. Number one, right? Right. Other factors could be, right, A, as the business holds old non-current assets, this can result in high cost related to repair, maintenance, and impairments. Right. Also, guys, we can tell depreciation. Right. And then, guys, we can also tell selling and distribution cost related to delivery of products through the supermarkets. Right. So these are the points, guys, that we can tell for operating profit. I do not see any other point, but as students, if you do notice something else, you please tell me, okay? Because remember, guys, in every class, sometimes students do see in different angles when compared to me. So any point that you see, you can let me know. I can tell whether it's correct or wrong. All good? Okay. So as far as I see, guys, these are the points when it comes to what you can say, guys, operating profit ratio. Right. Then guys, can you put the next one guys for me over there as ROCE guys faster? Right. Okay. Next one guys, can you please put the heading for me? ROCE. So guys, street, I believe it to be 13%, while the sector, I remember the answer being how much? 28%. No guys, sector, the answer was 28%. Okay. Right. Now guys, remember when it comes to ROCE, a student has to focus on two things. One is operating profit. The other one is guys, capital employed, right? Because basically ROCE is operating profit divided by capital employed. No? So these are the two things that you need to speak on. Okay. Guys, can you tell me first of all, guys, treat answer is very less when compared to sector. That's the main reason our operating profit is low. Exactly, right? When operating profit is low, ROCE also will be low. Is that understood? Right. So let's start writing guys over there. Right. ROCE is half of the sector mainly due to lower operating profits as mentioned above. Done. Yes, very good, Daniel. That's also a correct answer. Right. All good, guys. That's it. Nothing more to speak, right? Operating profit is lower. We have already spoken about operating profit now, so don't go to repeat the points again. Right, guys, now tell me about capital employed, guys, over there, right? Capital employed, our company, is it a high answer or a low answer? Right? Look at our capital employed, guys. Look at this part, right? See, now, guys, normally for ROCE to go up, two things have to happen. One, operating profit has to go up. What is the other one, guys? Capital employed should go down. Then only the ratio can improve. Now, our one is very low, no? So that's because, guys, one is operating profit is low. Other one is, guys, what? Capital employed is high. Now, capital employed, guys, can you notice one more thing? Look at the debt levels. Our debt levels are very high when compared to our equity. High borrowings. Very good, right? So because of that, guys, what's going to happen? Our ROCE is low. That is a point that we can tell, okay? Our capital employed is high and the organization has a lot of borrowings. Guys, also one more small thing. This company is holding what type of assets? Non-current assets. Those are very old. Now see guys, even with old non-current assets, still they can't improve their ROCE. Usually guys, when they are having old assets, right, ROCE should be high because capital employed is low, no, then ROCE should be high. But still these people's ROCE is very low. Yes, very good, Sazri. Right. Guys, another one more small thing that we need to speak on, right? Next part. Guys, what is the company planning to do now? Company is planning to now? What are they planning to do, guys? Replace these assets. Very good. When they replace the assets, what will happen to capital employed? It will increase. That means what will happen, guys? Next year, the ratio will be even lower. Okay. Now, this year already it is low. Very good. Next year, guys, what's going to happen? When you buy some more, it will be even lower. But again, another one small problem. How are you going to buy? Do you have enough cash in your organization? We don't have. We are already under overdraft and we have high borrowings. So when you do buy, what will happen? Borrowing also will go up. When the borrowing goes up, some more it will get affected the ROC. So these are the points that we can speak on this. Okay, so let's start writing guys this one by one quickly then. Yeah. So ROC, there's a lot over here, right? Then guys, next point we can start writing. So I think guys, I believe this is the ratio question where we can speak the most. Okay, this is the highest speaking question if I'm not wrong in past papers. Okay, let's start guys, next point, right? Right. This is also due to a higher, right, capital employed as the organization has a high level of borrowing. Okay. It should also be noted that the business holds very old PPE, but still was not able to increase ROCE. Right. Next year, the business is planning to invest in new PPE. This will lead to a higher capital employed, which will reduce the current ROCE. Guys, listen, the points what I'm writing, if it does not make sense to you, you have to tell me. Okay, now I explain why what will going to happen. Okay, but if the points what you're writing doesn't make sense to you, you should tell me. Okay, right. Next one. The business also has very low. Yes, I think it is. Okay, cash balances. Right. Within bracket, overdraft and high borrowings. If the business does buy the assets using debt capital, then ROCE will be lower due to another increase in borrowings. So guys, what they should ideally do is issue shares. Okay. Now guys, normally how do we collect money for a business organization, right? Normally guys, we collect, right, money for the business organization this way. Okay. One is by taking loans. Now in this business, we can't do that. Why we can't do that? Because we are already having high debt level. Second thing is normally how does business make money? They can sell non-current assets. But in this business, they can't do that also because already the assets are old. Right? You can't sell and then generate money. So the only way that they can generate money is by issuing shares. So when they issue share, they'll get some injection of cash. You know? So when they do get that injection of cash, they can settle their overdraft, settle their borrowings, and use it that way. That would be the way to go forward. Okay, right? Okay. Now, guys, once you're done with this part, can you guys give me quickly one comment on net asset turnover, guys, faster? Okay. Can you give me one comment on net asset turnover if possible? Okay. Can you give me one comment on net assets turnover? Yeah. Shima, it's like this. Now, see, when you hold low old assets, your equity or your capital employed will be less. Okay, now it's like this. No, wait, let me show you that part. Okay. It's like this. See, first one. Okay. Now, usually we go like this. No, what is capital employed? capital employed is equity plus non-current liability. Or there is another one way to define it. No, what's the other way of defining? Capital employed is equal to non-current assets, okay, plus current assets minus current liability. This is the other equation. Basically, this two. Okay, right. Are you okay with this second equation what I have put on the screen, right, regarding capital employed, right? Non-current assets plus current assets minus current liability, right? Are you okay with that equation, Sima, regarding this capital employed? Yeah. Now see what's going to happen. When you hold all non-current assets, the non-current asset value will be less, no? When the non-current asset value is less, capital employed will go down. So when capital employed goes down, your denominator is small, no? So when the denominator is small, your ratio then will go up. That's why when you hold all non-current assets, what's going to happen? It's going to result in an increase in ROCE. Low non-current assets means low capital employed. Low capital employed means you're dividing your operating profit with a small answer. That's the reason. Okay, no? Yes, that's correct, Sajri. That's good. Okay. Guys, now coming back to our question here. Okay. Okay, guys, net asset turnover, guys, number one. What's going to happen, guys? Net asset turnover, our one is it better than the sector? Yes or no? Yes, right. Net asset turnover, guys, we can tell Crete has a higher answer or a higher ratio when compared to the sector. Okay. Right. Right. Crete has a higher ratio when compared to the sector. Okay. Guys, what is the main contributing factor that we have a higher answer when compared to the sector, guys? What's the main reason? Because we normally, guys, net asset turnover means what, guys? Normally it's revenue divided by capital employed, no? Okay, right. So one thing, guys, we can suggest, yes, we are having a higher revenue. Okay, right. So one thing, guys, we can tell A, right? A high revenue. Okay. Or then, guys, what should happen? Capital employed should be normally for the ratio to improve, either numerator should go up now or the denominator should go down. The capital employed should be less. In our question, guys, what is the main reason why the capital employed is little less? Because we are keeping what? Old assets. Very good, guys, because we are keeping old assets. Okay, or maybe like a lower capital employed as the business holds old non-current asset. So meaning, guys, though the ratio is better than the sector, it's not actually a good thing. It's like a manipulated figure, right? Because we are having old non-current assets. And then, guys, you can also tell, right, next year, this will reduce when the business replaces old non-current assets. Okay. Next year, what's going to happen? It will be replaced now, guys. So then capital employed will be high. Capital employed is high means the ratio will go down. Okay, now guys, I think we are done with no, guys, all the performance ratios, if I'm not wrong. Return on capital, net asset, gross profit, operating, everything is spoken. Right now, guys, can you put the next heading, guys, for me over here? Right, position ratios. Okay, position ratios. Guys, this question, there's a lot to speak, to be very honest. Okay, right, put the next heading, guys, over there as position ratios. Okay, guys, let's start with current ratio then quickly. Okay, let's start with current ratio. Right. First of all, guys, I want you to tell me whether our ratio is good or bad. And guys, can you cite reasons if possible? Okay, please tell me whether our ratio is good or bad. And I want you to cite reasons as well on why it is lower. Okay, it is bad. Okay. Okay. So guys, let's check and see what are the answers that we can tell. Okay, number one. Wait, online people, let me check those answers. It's lower than the sector. Yes. Just remember, if it is high inventory turnover, that means we are having more current assets in the hand. Okay. And again, if it's high receivable also, we are having then more in the hand. So if it's more means ratio should improve, no? Okay. Right. Yes. Krishma, your answers are correct. That's good. Yeah. Okay. Guys, number one, now current ratio means, guys, what and what we have to speak on? We have to speak about current assets. And also, guys, what's the other one? Current liabilities. Right. Now, guys, first of all, you need to understand our ratio is much lower than the sector. Okay. So if the ratio is low, two things have to happen. One is current asset should be less, or maybe, guys, what's the other one? Current liability has to be more. So first of all, guys, you decide, okay, what I'm going to speak on. Right now, guys, current assets are less. What is the main reason, guys, why our current assets are less? Because we don't have what? We don't have cash. Exactly. Okay, so you can start writing the answer, guys, right? The main contributor being, right? The main contributor being the business has no cash balances due to overdraft situations, and high level of borrowing. Okay, and also high level of borrowing. Right, very good point, Sastri. Okay, very good point. Okay, right. Now, guys, the others, can you little bit check on the current assets and tell me why is the business not having cash? Now, one is we have an overdraft and we have to pay loans. Can you guys look at this part and let me know, guys, what is the other reason why we are not having cash? Okay, what is the other reason, guys, why we don't have enough cash? Yes, very good. That's correct, Amjad. Right. Can you guys look at the inventory level and this one and tell me, guys, why we don't have enough cash? Yes, very good, Rishma. That's correct. Now we don't have cash because we are paying loans. And what are the other reasons, guys? Look at these two and try to make a point, guys, if possible, why we don't have cash. Because we are having a high, inventory days as well as, guys, receivable turnover days. That means, guys, now see, we are selling to supermarkets now, guys. So because we are selling to supermarkets, we have to hold a lot of inventories, right? We have to spend, our cash is tied up in inventory. Also, guys, look at this. Our trade receivable also seems like a very high answer. So it means that, guys, we are unable to collect money from customers quickly. That's one of the reasons why we are having low cash balances. And also, guys, can you tell me from this, there's another one point why we are having low cash balances. Check and let me know, guys, quickly if possible. Out of these 4 points, there's another 1 point why we are having low cash balances. Exactly. Very good, guys. We have paid dividend. Right now, even with low cash balances, we have still gone and paid a dividend. Guys, can you little bit think and tell me why we would have done that? We have no cash at all, but we still went and paid dividends. What could be the main reason? There's a reason for that. What is the reason, guys? Why? Yes, Basil, that's correct. Why did we pay dividend even if we don't have enough money? What's the main reason, guys? Yes, Sajri, that's good. Asya, that's correct. Normally, guys, why do we pay dividends to people? To keep them happy and satisfied, no? That is because, guys, you know what this business is planning to do. Now we don't have enough cash, no? Now we can't go for more loans because anyway, we have high amount of loan. And how can we collect money? By going for a share issue. So that's why this year they paid dividends even if they don't have money. So then then shareholders will think, okay, this company is paying properly. Then when they go for a share issue, people will be willing to invest because they know that we are going to get dividends. That's the reason why they pay dividend even without money in the business. All okay? That's okay. Let's write those points then over there. right? The business cash is tied up with inventories and trade receivable. And then last one, a payment of dividend even with an even with an overdraft situation, as the business might be looking to issue shares next year to solve their cash balance problems. Or maybe the better word to use would be, guys, rather than cash balance problem, to solve working capital issues. Yeah, 1 minute. Sorry. Okay. Now, guys, y'all can guys start writing about the other one also, guys, faster. Can you give me 1 point, guys, faster? Inventory days, trade, because there's a lot of ratios to speak here. Trade receivable day, gearing ratio. Right. Can you guys tell me whether it's higher or lower, and if possible, guys, can you start citing reasons also for me? Okay. Please start writing whether these ratios are higher or lower. Like I said, guys, listen, this is from my experience, the question that we can write the most. Normally, other questions, we can't write this much. This is the highest writing question so far, what I have seen in past papers. Okay. But that's a good thing also. Then we can write a lot now, guys. Okay. Right. Can you guys quickly give me points on these? Why it is lower? Okay. Very good, Basil. That's the reason for the inventory turnover to be high. Correct. Good. Yeah. Yes, Sazri, that's correct. Yeah. Yeah, Nazmi also answer is correct. That's good. For both, we can tell that as the answer. No, Daniel and Amjad, guys, can you try to connect it to the question? Try to connect it to the question, guys. The points are okay, but try to connect it to the question. Like, what's the main reason why that is lower? But without looking at the sector's answer, we cannot tell that correctly. Okay, guys, others, inventory days, why guys, our one is very high when compared to sector? Yes, very good, Ashley. That's correct. Because, guys, we are selling to whom? We are selling to supermarkets. Correct. Okay. Other people, guys, they are directly selling it to retailer. No? Okay. We are selling it to supermarkets. So, because we are selling it to supermarkets, guys, over there, our inventory is very high, right? And also, guys, to meet supermarket demand, we have to buy locked and keep. Okay. That's the main reason. Okay. So, let's start writing, guys, over there. Inventory days. No, retailer means we are selling it to the retailer. That's the reason. Okay. Right. So guys, you can write down guys over the inventory days, right? The ratio is high as Treat Corporation is selling to supermarkets. Meaning they need to hold a high amount of inventories to satisfy demands of supermarkets. Okay. Because guys, when you normally tie up, exactly, when you tie up with supermarket guys, they have a demand that you need to meet, no? So you have to meet that. So for that, you have to buy a lot and key. Okay. And also guys, you can tell, right? Having a high inventory turnover, right? Having a high ratio is not an ideal, is not ideal for Treat due to, right? Due to the nature of their business. Because guys, now these people are into what guys? These people are a confectionery store, right? So there is a high chance that these people's products get what? Perished, right? So it's not ideal for them to have high inventory turnover days because it can lead to expiry. Then you have to go into discounts, right? And that will have a lot of issues in the future, right? That's the reason guys, what I can tell over there. Right. Next one, guys, we have over here trade receivable day. Let's start writing, guys, over there. Right. The days are very high, right, when compared to the sector. Again, guys, what's the main reason? Supermarket. Because, guys, when you tie up with a supermarket, you're signing a contract now. In that contract, guys, they have more bargaining power. So they can tell, we want more days to pay. So then you're helpless. Guys, your sector, are they selling through supermarkets? No, they are selling through what? Retailer. When you sell through retailer, they directly get cash. Whereas you, when you sell to supermarket, you have to wait in order to collect the money and you have no bargaining power to push supermarkets and ask money for faster. So you are at the losing end. Okay, because your sector is directly selling through retailers. Right, so we can write guys over there. Right, due to, right, number one, we sell a high volume to supermarkets. A high volume to supermarkets, meaning they have a large, or they have a high bargaining power, right? They have a high bargaining power to increase credit period. The sector directly sells to retailers, therefore their cash would mostly be on, sorry, their sales would mostly be on cash. Last one, guys, gearing ratio. The business is on a very high risk as their debt levels are much bigger when compared to equity due to high levels of borrowing. This would result in high finance cost and low cash balances discussed above. Okay. So guys, I think now we have spoken about all the ratios. I don't think there is nothing more we can speak. I think guys, we have spoken to at least around 2 pages, I think, if I'm not wrong, when it comes to the analysis. Okay. So normally questions don't go this far, like I said. Okay. Last one, guys. Conclusion we can write over there. So they're asking, analyze the performance. No. Okay. So guys, we can tell conclusion, right? Right. Tweet performance and position is low when compared to the sector, right? But it should take the following into account. Okay, right. Sector policies of preparing financial statements, right? And their strategy to raise cash next year and strategy to shift to more retail sales. Okay. Now the biggest problem, guys, what these people are having is because they are selling to supermarkets, they are helpless. So what they can do is, rather than selling a lot to supermarkets, reduce that and try to give it to more retail sales. So if you do give it to retail sales, inventory days will go down, trade receivable day will go down, you can improve your cash balances, you can improve your margin. So if you shift your strategy, you can improve most of your ratios. And also, guys, they have to look at how are they going to collect cash in the long run. Okay, because they haven't collected cash properly now, guys, over there. You can, but normally we don't, but you can say, look at that aspect unless they tell us to. Yes, correct. Yeah. No, not necessarily. We don't need to. Now, here the question says only analyze. No, so only analyzing is enough, Shima. Right? Just in case if you do want to add a few points, you can. Unless, but to be very honest, this is not necessary to give how to improve because they haven't asked. No, so only analyzing is enough. Yeah, it's like this, student. It doesn't matter how you present your answer, as long as you give the valid point. Okay, so that's not an issue. It's working. It's fine. Yeah. One minute. Yeah. So it's like this. So now when it comes to the conclusion part, now overall, all our ratios are very less now. But normally what you should understand is when we do sector comparisons, we have to look at the accounting policies. Now let's say my policy of depreciation is straight line, sector is reducing balance method. That means when I'm comparing, that's not fair, no? Or maybe the sector policy of accounting is to charge depreciation to operating expenses. But my policy of depreciation is to charge to cost of sale. So when the policies are not the same, when you directly compare your answers, it's not exactly fair because it's not the same level. These 2 points is how they can improve their ratios. This is not necessary to be very honest, but how can they improve their ratios over there? Okay. Because the biggest problem what they have is collecting cash. So they have to find a new way to collect cash because these people are now going to replace the assets now. And also, if they shift to retail sale, what will happen? Now, the biggest problem what we have is what? When we sell to supermarkets, they take a longer time to pay us. We have to buy a lot of inventories and keep. And our margins are also less. Sector is not facing that issue. Why? Because they're selling in retail. So why don't we also go into retail and do the same thing? That's what we're telling over there. Just check and say, are you okay with the conclusion? Basil, what's that one? Third point. Right. Which one was you telling over there? Which point? That this one. Okay, what they're telling is the overdraft is not part of the non-current liability. Okay, what they're trying to tell over there is the overdraft is not a part of the non-current liability. That's it. No. Here the directors have not made a wrong decision. No, they have paid the dividend even when the directors were concerned about that. So they were concerned about paying the dividend, not that they weren't. So guys, remember the next one. No, not necessary, Amra, not necessary. Okay, guys, now what you all do is, guys, you all now it's 10:40. You all go for your half an hour break and come back at 11:10, will you? Right? And then we'll continue with the next part. I'm seeing whether to do another ratio or next one. Wait, let me check on that battle because I asked him to hold it a little bit because I made a mistake with the dates. Okay, so that's why I asked him to hold it a little bit. Next week it will be available. Right, have your break and come back, guys. Capital.
Thing is account is here there is a different account.
It is there.
Yeah.
So good. Then all done, but only tax is in there, no? Yeah. But again, once you have mistake, you correct. We got
3 years, 2 years, years, 5 years.
okay.
Mistake, small one
Small,
mistake.
small mistake, you can understand, but how the exam is falling, which one falls first normally, FM is last normally. Audit is first Monday, other one Friday. This time I'm giving for them free. Afternoon come with a full time batch. So Wednesday, Friday, Sunday. So for a week, we are doing like 4 8 question. So last time with you all, I only had one day of work. These people I put some days. Yeah, now these people are keeping last week. But no one needs this guy. You have to go through. So my subject is risk free, unlike others.
Which company? What's the?
We had 79%.
They are saying last bench and 100%. Pass it.
Okay.
Now we had to
Max that.
max that, but me and Arthur only in the class, but
Right, okay. The others are not doing it.
not doing.
Okay. So, okay, so two will be like.
If one way, if both ways,
I think in our class last time we had around 15 students sitting, 15 or 12, I think, sat. Most of them were okay.
different.
This time we have more because there are two batches going on now. October, December, full time, part time. So there are more, I think, around, if I'm not wrong, 30 odd are sitting. I think
You are doing the full time.
full time was I'm only doing. Okay. So the students who were there in class last Sunday, that Basil we will be doing on Thursday. Okay, that area we are going to do on Thursday. Yes, Samjit, yes. So Basil, Sunday we'll keep for console. Thursday we are going to keep for individual income statement and SOFP. Okay. Right. Okay, guys, last class I did a question halfway and I stopped. I would like to complete that question today. Okay, can you guys a little bit go to this part, guys, over there? Yesterday or the Friday one. Friday, no? Yeah, I'll keep you updated. Okay. Okay, right now, guys, those who were there in class last Sunday, could you please tell me, guys, regarding planned question, how far have I done? Okay, right. We'll see, Nazmi. Now, this question, what I'm going to do is a little bit of a difficult one. Sometimes it might go a little bit more than what we want. Okay, so sometimes with this question, we might have to conclude or maybe start another ratio question. Right, that's the plan for today. Okay. Right. Because last Sunday, I started a question called, okay, we only typed out the format and I believe we did adjustment number. Okay. Okay. We just added parent and subsidiary into 9, no?